All right, welcome everybody. It is Tuesday, May 27th, 2025, live Income Navigator trading session. Yeah, good, Brian. I'll actually see Kenny tomorrow night at the Sphere as well. So, should be good. We'll see how that goes. So, let's get into it. Let's jump into some stocks. Let's jump into some trade ideas. Markets are up bigly today. So we've got a lot going on, which is why I didn't really want to do a lot of trade setups over the weekend because things looked pretty green starting on Sunday night and then again last night with the on and off again UK tariffs. Who knows what the heck's going on? We'll go up, we'll go down. You just got to be nimble in this space. I think just keep your head about you. Trade what you see, not what you think, and then again, be nimble. I'm just trading the plan as we have it. And I got a bunch of little spec trades on, probably more than normal right now, simply because I don't really know what this market's going to do from day to day. We are a tweet away from going up, going down, going sideways. Who knows? All right, let me share. Let's get into charts a bit and see what is available. You do not need to see me, so let's shut the video off. All right, let's jump in. I'll try to let people in as I can. And let's just start off with ES. So we came down, a nice breakout here off of the, oops, let Wendy in. Yeah, this previous support resistance level that flipped. This is where we bumped a couple times, tried to break through, finally broke through, a little bit of a gap to fill there. Ran up, and this is again, I thought this is where we were getting a little bit overdone. We never really got super extended on RSI above the 70, but we did hit 70.05 here. I don't know what day that was, but something right around that 70-ish mark, right around the 19th, and moved higher. And to me, that was a bit overextended. We came down, we touched on this support level here on Friday. Bounced off of that, stayed off the lows. The uptrend line still pretty much intact, give or take a couple points here and there. We're right at the 200, so we're holding the 200. We're holding the 21 EMA. We got the 50 EMA right below us that we didn't tag. We did tag it back here, and that's moving higher. We're still in the uh, we're still in the death cross where we tweaked the 50 below the 200 back here. We haven't resolved it yet fully, but things look still pretty decent. The weekly looks really good here. You got MACD, it bottomed here, obviously, and has been doing nothing but marching higher. RSI has been marching higher, but is nowhere near overbought levels. Stochastic momentum is a bit overdone, so again, we could see a little bit of consolidation in here. But right now, excuse me, things are pretty bullish overall for the market. And nice little pullback, huge move today. We'll see what the volume looks like. So I think we want to keep an eye on volume. That if today is a pretty good update, but the volume's nowhere near what it's been, I think I would be a little bit more concerned with where things are if volume does not improve overall. But we're bullish here. What would you do in ES, or what could we do in ES? I mean, I still think 112s are a perfect setup. I've been just saying that all along. If we get any kind of a pullback, you've got all kinds of support below us here. You've got the 50, the 21, you've got the Bollinger Bands down here. You've got all kinds of support levels in here. You could draw another one, probably a 55.95 down here, a little pivot support level. So you can draw all kinds of areas where we might, find some support. I'm still letting people in. You've got a pivot high in here. That's also typically a support level. We banged on it once over here. So a lot of different levels here providing support. Now, you know, a couple tweets and some crazy things away from knocking the markets down, but you can see what happens. when we come down, I just don't think we're coming back to retest these lows, but who knows? Maybe that will happen. But I like the 112 simply because I like where we are in here. I also don't really mind uh, a strangle in here either. We don't have one on right now, but we'll cover the covered strangle today, which is a little bit different than a standard strangle. It's not a bad situation necessarily. We're getting a little high on RSI. I like to put on strangles between 40 and 60 RSI. We're at 60.7. We're in a strong move up. Probably be a little hesitant to want to do that here, uh, but I don't think it's the worst trade in the world. So I think 112, Jade Lizards, things like that, a good opportunity. We will talk about the covered strangle in here as well, which is not a bad trade opportunity. All right, let's quickly keep moving. Oil, nothing's really changed in oil. We can extend this all the way. Okay, we can extend this downtrend line a little bit further. Here, we remain in a downtrend. We remain in this uh, range area that we've been in. I think we get some news that, oh, Iran might sign something, Iran won't sign something. Iran might sign something, Iran won't sign something. It's the news out of the White House is what keeps these markets up and down a bit, not necessarily fundamentals or anything along those lines. We're pulling back again on oil today, breaking back down. We failed really to do much with this 21. The 50 has provided pretty good resistance here, as well as this resistance level. So both of them combined here and again here, and we're just heading lower overall on the weekly, on the daily. The weekly doesn't look that bad. MACD has been moving up. RSI is pretty much flat, hasn't really gotten moving yet. Stochastic momentum's pretty much flat, but off of their lows, which would again make me want to think that on CL, I would just keep looking at 112 trades as new trade opportunities in here. I don't know that I mean, I don't think a strangle's the worst trade, but it's not my favorite thing right in here right now on it to add. We're in one. It's pretty much flat down at like 150 bucks or something. Nothing to do there. Let's keep an eye on oil and where oil goes. But I just think you play 112s, and if you get below the $50 range in here with your naked puts on either 112s, I'm at 47 on a 112 and 44 on a strangle. I think in the mid to mid 40s is a pretty good spot um, to have something here. Would I want to do? Uh, I don't want to get long at all. I don't really want to do naked puts. I mean, if you want to, that's your call. It's just not a great setup with us falling lower here. Nothing to do on crude except maybe, like I said, a 112 trade. I think these are just really good setups everywhere for 112s. You fall down, you hit the trap. You move up, you have no risk. And I want to have really no risk to the upside, not as worried about the downside. Gold been an interesting case on gold. The trend line just keeps chugging along. We are up, we're down, we're sideways. When the markets are up, gold's giving back a bit, but I think gold still remains strong as a flight to safety type of trade. If things don't go great, then I think it's gold. That's the concern. Does it hang out in there? Oops. And you have a bit of a symmetrical triangle here that we've been in up. Didn't come down quite to the bottom until here. We tapped it again, bottom, top. It's going to break one way or the other soon. Really starting to get congested in here. If you're, looking at a direction that you want to go in, well, looking at the daily chart, things look pretty decent on the daily chart, holding the 21, which is above the 50. You got an anchored VWAP acting as support. You got this really long-term trend line acting as support in here. So I think any of these pullbacks on gold are good opportunities, in my opinion, to get in. Now we're sitting on two 112 trades, which are doing great, and we're also in a strangle, which I think this is not the worst strangle opportunity. So if you're not in something, I think a 112 or a strangle Here on gold, not bad opportunities. We can explore some of those. Bonds, before we jump into bonds, as always, we'll take a look at the US dollar, which continues to be pretty weak. You've got the main downtrend line, nothing's changed on that. You got a secondary downtrend line, uh, excuse me, in here. I'm still dealing with this cough. Secondary downtrend line. We can't get past either one of them. Maybe we're putting in a little bit of a bottom on the U.S. dollar. We'll wait and see. How's that affecting bonds or anything else? Well, yields are just off of their highs a bit the last couple sessions, but we did tag way up here at about 515. So 5.15% on the 30, which was a high water mark recently. But we've come off of that pretty substantially. So bonds getting a little bit of a boost here as the dollar seems to be maybe start trying to base out. It's at some lows and yields coming off of their highs. Right now, I think just keep an eye on what's going on in the bond market. We are still in a TLT strangle. This thing's up 30% in 22 days. I'm fine with that. If it would drop down and we would get assigned, I would be more than happy to take assignment on bonds down in here. So I think you could on bonds, and I'm just talking TLT right now. We'll look at ZB. I think the covered strangle is a great opportunity in here. I also think if you can make them work, I think a 1-1-2 trade is not a bad opportunity in here either. Let's take a quick look at ZB and let's keep moving. ZB trying to find some, it broke this previous, support level for a day and a half, 2 days, and then we're back above it. We'll keep an eye on that level overall, but MACD trying to reverse itself a bit. RSI is climbing, stochastic momentum climbing. The daily looks like a pretty good opportunity, I think, on ZB to sell a naked put. I think a 1-1-2 would also be a good opportunity, and I do think that that covered strangle trade that we're doing, kind of the OG version that I use, and I just did one on ES. I think that's not bad down in here. I think this is an area at these lows that you could find that you could take a little bit of risk um, on bond futures. So if you wanted to do something else, sorry, my voice is a little scratchy. If you want to do something else with a little bit more juice to it, you could look at TMF, which is the 20-year 3x leveraged. Okay. So if you wanted to place something on the stock side, let's pick this. Ooh, let's bring this across. Pretty interesting how that worked. But this was a previous pivot level. We struggled with it, and then we actually popped right to it and just above it today. This doesn't look bad on TMF, so I think bonds in here, interesting. Look, you could even do a covered strangle, naked puts on TMF as well. And if you wanted to do something that's more defined risk, I don't think it would be bad underneath like the 3 ATR and the Bollinger Bands down here around 33-ish or less, somewhere in here, to do a put credit spread. I don't think that's a bad trade either at these levels, and I wouldn't be opposed to it on ZB either. I think put credit spreads not a bad play in here. We'd have to look at and see what we can do, but somewhere around this 108 level. And I'm going to put 108 PCS, and we'll keep track of some of these things. So we got a bunch of trade ideas starting to come up. Straddle, I don't know, I'm not a big straddle guy. Um, you've got to, what you really want in a straddle is you want something to really take off with pretty good either direction. We don't really care the direction that it goes. I'm not sure we have enough momentum to the downside to necessarily straddle it, and I think I would want to play directional on it. Uh, You could. You want volatility to expand. I don't know where ZB is right now. Let's see if we can take a quick look at IVR on ZB. Looks like it's around 33, so it's maybe not the worst thing to put a straddle on. It's not my normal thing, but um, I think that's not bad. And I also think you could, like I said, I definitely think a strangle here is not bad. With IVR at 33, that's still not a bad spot as well. So there's a couple things to think of. Copper, we've been talking about this for weeks and weeks and weeks that this is still really a good strangle opportunity. I am not changing my mind despite Friday's big move in copper. I think you can still strangle copper here. Uh, it doesn't look like you've got a directional move uh, in any one way. Maybe you're breaking out here. You've got tight Bollinger Bands. Maybe we start getting uh, things going to the upside, but and I also think silver is another strangle opportunity. I think we just have a lot of strangle opportunities out there because we just don't know if we're going up, down, sideways. We're sitting right in the middle. A lot of things are right at their 21 or their 50-day moving average. A lot of things are right in the middle on the RSI. I just think these are great setups for strangle opportunities. If we look at the Aussie dollar, it's also not a bad strangle opportunity in here. I think you could also look at something on 6A for a strangle. We've got a couple strangles on, but so I don't know if I have room for another one, but we can certainly take a look. But there's a lot of opportunity there to do something. All right. Let's keep on rolling if we can. And let's take a look at Amazon. Amazon had a gap to fill here, still has not filled this gap down in here. It came down, bounced off the 21, the anchored VWAP, the 50 almost, back above the 200. This thing's right at all of these levels in here. I think stock-wise, Amazon is not a bad play. The weekly looks pretty good. The daily looks a little bit weak. It's just consolidating sideways here right now. I think you just let it consolidate. It's really, really struggling with this whole tariff situation to figure out, how that's going to affect Amazon. But I'm very, very bullish on this company. They're very AI driven. They're going to benefit from AI. I think having automated robots in the factories, they're going to have more automation here. Amazon can really be run pretty well automated. No offense to the people working there, and I would feel bad for them, but I really think now that Amazon, there's just not besides drivers, and who knows how long that lasts. Right now, you can automate the majority of Amazon and control it with a couple dashboards. So I like Amazon here. I think it benefits from growth in AI. I like the fact that we're off of our highs, and if we put a fib level on, I don't know where. Let's see. Let's go down here. So if we put a fib level on, we just passed, this, the 50 is where we just tried to break and we failed right at the 618 back here. So failed at the 618, came back to the 50, and we're kind of holding that one. This would also be another good indication to be bullish. So I'm not opposed to doing anything bullish in Amazon here. Nvidia, we've got earnings coming up, so I'm not going to do anything in here with this. So we got earnings coming up on Wednesday this week. So we got earnings coming up. Big gap up today. It's been consolidating a bit, but it's had a monstrous run here. I just don't it's just not for me right now with earnings coming up. Too many things. Hood is just out of control to the upside. I love this company. I'm in it. I wish I was in it more. I want more Hood. The more that I could get on this thing, the better. We are in the lazy trader account. I've got a covered strangle on this thing. I've got two covered strangles Well, actually, a strangle. Yeah, I've got a covered strangle in this and a leap, a long leap. Long leap's up almost $3,000, 64%. The covered strangle is struggling a bit because of the call side. We'll have to address that and get that fixed. We're just going to keep pounding to the upside here. It's getting over, it's overbought. MACD's trying to roll over a bit today, certainly keeping this thing elevated. Stochastic momentum's a little high. So I think it's not something I want to get more long on right now. I think let's give it some time to pull back and see what happens with Robinhood in here. I like it. I just need some more of a pullback to be able to get longer. Palantir, pretty much the exact same thing, hitting new highs, struggling a bit, up and down, sideways. It's overextended. I'd really like to get into it a little bit more on things. We are in it in the lazy trader account with a leap that's up 54% in 89 days now. So we are long on the leaps. It's so overdone. It's ridiculous, but uh, maybe without any FOMO here, if we're rolling over or consolidating a bit here, this may not be the worst spot on Palantir to maybe look at something to wheel into something or a covered strangle opportunity to get in on the lazy trader side, not necessarily the trading side. Google remains in this channel. All right, so Google's in this channel heading to the upside. It's down decently off of its highs. I don't know again if the whole market's going back to its highs. If we pop a little bit of the fibs on here, we came up to the 50 and failed at it. We're heading up to the 50 again. We had our struggle with the 38 too. It acted as a perfect resistance level. And now we'll go up to the 50, which is the next stop. It's not overdone. I think it could be just getting going. I'm not I don't love Google, but I think it's not a bad trade in here, so I'd be bullish on Google. I also think Tesla is getting a bit overdone. Uh, in here as well. Elon's back, and focusing on it a little bit more, giving up a lot of his Doge duties, which is exactly what this thing needed. Uh, I think it's solid in here. So I think we've got a solid move to the upside in here right now. I like it. Um, Even though it's getting a little bit further gone here. This pullback last week was an opportunity to maybe sell something down in this anywhere from under 300 to 270 range. I think anything in here would not be the worst uh, area. We'll keep bringing this sideways uh, in here. We've got some gaps to fill. We've made another gap today. I'm going to hang out without doing anything on Tesla in here, but I think it's a good opportunity. And then Apple, took it on the chin when the president decided to single them out and put their own personal tariff on their iPhones. Uh, excuse me. I don't think that'll last. I think that'll all get resolved. I think this was a good opportunity to get into Apple down here. It's not the same company it was, but it's a good consumer staple in my opinion. And if you look at, really, let's take this line across. Okay, we're pretty close from this mark here. We're pretty close to a pretty solid support level here, down at the bottom of the Bollinger Band. This is not a bad place on Apple. We're already in it for a trade. I really wanted to put that trade on in the lazy trader account. We did it in the normal trade account. Don't think that's the best place for the Apple trade, but I would like to. So I actually may move it. We'll see how this thing fares. And we may start something new uh, in Apple because I do like it down here and kind of a secondary trend We'll put it right about there. All kinds of lines on here for Apple right now. It's in this downtrend, major downtrend. It's in a secondary downtrend, trying to find some support. This might actually start to become a bit of uh, a descending wedge here. So if we do break this 193, I do think Apple is a decent company long term. Not my favorite. It's not going to give you the explosive growth. Costco, I like Costco. This pullback has been excellent in Costco, right back to the 21, back to the 21, even the 50, back to the 21 again. It got a little bit overdone. Now it's pulling back a bit. Uh, I think this is not a bad spot for Costco, so I would be bullish on Costco in here. I wouldn't go hog wild, but I think you could start to dip in a little bit on this 21. Hims is, this pullback was good to the 21. I like this company. I like it. If I could get something down here around the 40-ish level, maybe around this fit about the 50 EMA on the daily. This is not a bad spot to get into Hims. Mags, we're already in and just wheeling or covered calling our way through. This thing's really driving the small account. The small account's doing fantastic. So we've really got that count dialed in. And then let's take on a few other things. If you have any symbols, fine, I'll look at them. If not, what I want to look at is. Well, we'll take a quick peek at SoFi. I love the pullback in SoFi. I like this area. We're already in it on SoFi. So this thing has a cash secured put around the $12 mark, down around here, which is great. That thing's up 81% now in 12 days. We've also got a poor man's covered call. We're running in this thing, which is doing fine. So I like SoFi, like where we are. I also like Uber. I like the pullback on Uber. A lot of these things, these pullbacks were pretty nice to get recently. Let's take a quick look at Bitcoin and move on. Bitcoin, let's just keep pushing this line up. Bitcoin just keeps rising, consolidating, rising, consolidating, rising, consolidating, rising. Now do we get some consolidation again in here on Bitcoin? We'll see. IBIT is how I'm, playing that. IBIT looks really strong. I'd like to add more. I would love to get some sort of a pullback in IBIT so I can add more. MicroStrategy has been a great way to play things, and I love this, level down here for some support. I love the fact that MicroStrategy, while Bitcoin has been moving higher, MicroStrategy has been moving lower. Okay. So it's disconnecting a bit from Bitcoin. Maybe it's, a little profit taking. I don't really know that there's anything specific on this. It's, you know, some class action lawsuits, not really worried about that. It's adding more Bitcoin. It's adding more Bitcoin. So I don't know why pulling back here on it, but I think this gives us some good spots to do some of the in the money covered calls or the naked put play, however you want to look at it. But I love the in the money covered call here on MicroStrategy. I think we get really good opportunities. This thing has been selling off. It might have some more downside to go. It tried to make a move today, is failing at that. You're right at the bottom of the Bollinger Band, 31, uh, or the 50 EMA. This is not a bad spot for some trade action. All right, so there we go. A bunch of different trade opportunities overall. So uh, let's move to some trades and model a few things out. And let's start with the main trading account. So let me share, keep going. All right, let's run through here. We have some opportunity. You know, our buying power is decent on here. We still have some room left. We've already got two oil trades on. We talked earlier today, maybe putting a 112 trade on. We have this 112. It's only 7 days old, so I wouldn't really be putting anything new on uh, in oil uh, here. And we also have a Strangle on. Neither one of these is doing much of anything right now, so we just let those cook. If you want, you know, you can put something on. It is not time to add a new uh, naked put because our last 112C, we only have one naked put running right now. We've taken profits on all of them. Uh, so we're good. We've got one naked put sitting out here. It's 8 days old. We'll be putting out another one next Monday. This thing's up a little bit for now, and there's nothing to do with it. We've got plenty of put debit spreads covering it. So, and some of these ratio hedges. There's really nothing to do on these, but we did do a covered strangle, and this thing's up $1,000 in 4 days, which is not bad. I'll cover this strategy again for you. So, if you're in the Discord, you can go to uh, Tom's resources as well, and in there is the Tom's covered strangle trade. And essentially what we do, and it doesn't matter, I do these a lot on ES and MES. MES was really where I put it a lot um, overall, but normally I'll go in, and we'll just use ES as the example, and we usually go around 30-ish days or so. I like we're still in the U's. Which would give us the next expiration. So if I was doing anything now, I want to be the U5 contract. Why? Because um, if you're looking at the U5 contract, it does not expire until September. So if you would get assigned, right now we have all the way until September on that contract, um, and to write calls before we have to do anything if we get assigned. Right. So right now, I'd still go out right around these 30 days. Let's just look at the 30 day. I don't know if this will give us, some of these don't have as much. Yeah, I think that 30 was fine. Sometimes you don't have as many strikes or as much open interest. But what I would do is I typically sell around the 12 delta on the puts, which would be somewhere right around here at 5,500. Again, you can do this on MES as well. So if you have a smaller account, MES would be fine. So smaller account in here, 5,500. And if I look at the chart, I also will adjust a little bit based on the chart, based upon where we might have some supports. And I do have support at 56 and 55.26. So to me, this is not a bad level in 30 days. So I would sell this as a naked put. Now, selling this one essentially starts the process. It's almost like a wheel, except we're writing covered calls, but I'm also going to go down and sell another one somewhere around 10%, 50 points lower, 10% lower here. Well, 10% lower on this one would be like 500 points. But we're going to go around the 8 delta-ish or so. Keep jumping back in. Let's 5,400, something along those lines. I think right now, how far are we apart? We're about 150 points on the last one. I think that's not bad. All right, so somewhere in this neighborhood, we could get a little bit further away on this. But essentially, what we're doing is if we get assigned on this top one, the 5,500, what I would do if I get assigned here and this one expires worthless. Okay. We're going to make $1,600 on this, and we're going to own it at 5,500, which to me is Not a bad spot uh, from here. 5,500 from 59.66, almost 6,000. I mean, that's 500 points down. It's almost a 9% drop. So the market drops 9% and we get assigned, fine, I'll own this thing at 9%, down from here, which is halfway to the 5,000 mark. If we get assigned on both, our average price is going to be around 5,400, which is fine. So if we get assigned on both, 5,400. If I got assigned on both, I would sell two calls at the 5,400 strike, which would be right at the money, which would be somewhere around $100 per contract times 50 multiplier times two contracts, because I would have been assigned on two of these, depending on what size. So that would yield $1,000, something like that. So we get about $1,000 in covered calls on this thing. If we get assigned or if we get it called away, then fine. We make another 1,000 on top of the 1,600 on that one. So it's a pretty good rate of return. If we get assigned on just this one and this expires, the 5,300 expires worthless, then I will sell another at the money 5,500 if assigned, okay, which is going to give me about $100 times 50, so about $500 there. And then I will sell another, uh, which would be the call, and then I'll sell the strangle part, the put, down here as well. Probably get a little bit lower, depending on the time frame that we sell these. I'll typically do weeklies on these. So there's the overall plan on this covered strangle. We added one here last week. I'd like to add another one, but it's a little too soon. So let's let this thing percolate a bit more. I would consider taking profits on this thing early. If we get there, we'll see. I mean, we are up 50%. We're up $1,000 in 4 days. It's a nice little bonus. Uh, let's watch and see what happens here. Let's see. Go through this using SPY. What setup is this? Could we show the MES? All right. So let's do the covered strangle on MES. Should be almost the exact same thing. So if you get, again, a smaller account, we're going to go out about 30 days. I'd like to get 24 to 30 days. Either one would work. As long as I'm in this new contract that doesn't expire till September, you're fine. Let's take the 24-day one on MES, and I'll start around 12, which is about 55.90, a little higher than I'd like to be, but it's okay. So 55.90. 55.50 probably be a little bit better. It's just outside of the 12. Either one's fine. So let's just go 55.75, and then let's go like 100 points lower, 150 points lower, maybe just 54.25. So if we were doing this on MES, here's what we're doing. All right, so if we did this on MES, we'll do this one 150 wide. Here, we're going to sell both of these right now. And if we drop to 55.75 from 5,900, okay, it's a pretty hefty drop from here to get down there, 8% drop or so. Uh, I don't know that if we get assigned on this one, but not this one, we're going to keep the $164. We're going to, our total buying power on this thing is $2,000. Okay. If we get assigned on the first one, we're going to keep our 163 bucks for the total, and then I will write an at the money 55.75 call, and I'll write an out of the money put. So I will own shares of MES, and if we owned shares of MES in here, uh, takes up for me about $2,400 in buying power to own one contract of MES. And we're going to be generating, 80, excuse me, like $90, something like that here. So times 5. So we're going to, $88 times five, 440 bucks we'll make by just selling the at the money call. And we can probably go down around, 10 delta or something. So sell this. So if we took possession of MES, this is what we would do. We would be look to be called away right at the strike. We could book another $500 on this trade if we do that. Uh, so there's how we do it on MES. You can also do on SPY, but if you don't have a PM account, it's not really going to be great on SPY. But you can do something similar on SPY. This is a portfolio margin account. Let's just say we want to do like the 545 and then maybe 15 points lower, maybe the 530, something along those lines. I'm just looking to see what's going to work best in here. Something along these lines. So again, you're going to use a little bit more buying power to do this, but we can make 396 if these things expire worthless. If not, we're going to get assigned SPY, okay, at whatever that price was, which is going to take up about $8,000 worth of buying power. And it'll also take your cash up. So just remember, use your cash. But if we did get assigned, we would sell the at the money call, which right now is around 11 bucks, okay, which is going to bring in 1,100 bucks, and then an out of the money, again, maybe like a 10 delta put or something like that. If we keep dropping in here, we'll keep this $1,300 on SPY. And if we drop on here and get assigned again, we'll own two contracts of SPY. If we get assigned on both of the originals, okay, something like this, if we get, 395 bucks on $7,000, not too bad. So it's again not a giant trade, but this is only um, for 1 month. That's a 5% return. So again, 5% return. If you get assigned on both of these, we're going to own it somewhere around 540 as our average price. And if we get assigned on both, then we write two calls. If we get assigned on only the top one, then we do the at the money call and an out of the money put to simulate the covered strangle. So I hope that makes sense for you. Really good returns on this one. Uh, there. So yeah, at 10%, buying power may not be the same. Neutral prices on these strikes, yeah, probably. Might be a little bit different. I am not that worried. My buying power is in totally fine shape, and I've got plenty of ES long put debit spreads, so it shouldn't really affect me at all if we drop 10%. Now, if you drop 10% in 1 day, that's a big difference, Tyler, than dropping 10% in 30 days. We dropped 10% in 30 days, and we were only dropping like 2% a week for 4 weeks. VIX might go up a bit. Maybe VIX will be 20, mid 20s or something like that. Uh, it all depends on how fast we get there as to whether it happens or not. But I think it's a good opportunity trade if you're bullish on anything. We just put out a bunch of bullish trades. If you want to do this on Amazon, do it on Amazon. If you want to do it on Palantir, do it on Palantir. If you want to do it on Google, do it on Google. Costco. If you're bullish on MicroStrategy, do it on MicroStrategy, which is a bigger product. So there's some opportunities on the covered strangles right now. Let's see. So that hopefully that knocks out covered strangle. Is this in your plan yet? It's always in my plan as a spec trade. So this is something that's in my plan as a spec trade. If you look at uh, my trade plan, it's in the trade. It's not in the current trade plan itself. It's in the trade plan that has all the different strategies. Again, right now I'm putting on a lot of trades that are spec trades. And let's go back to take a quick look at all of the trades we have set up. So, 112Cs down here. Okay. You can see all of the put debit spreads we have. There's 1, 2, 3, 4, 5. There's 6 of these and only one naked put. Okay. So we've got plenty of hedging in there right now, and the 112C's been nicely profitable. You can see that we've got these Poorman covered calls in here. On QQQ and SPY, those are fine. So these two are really the core trades according to the plan, as well as Strangles. We've got three Strangles, gold, oil, and then this TLT one in here. So these are all fine. I don't think I'll add another one in here right now. But then look at all of these spec trades. And the spec trades are higher than normal, but I have lots of buying power because I really only have one naked 112C trade on. So you've got a gold 112, you've got this uh, Berkshire Hathaway covered strangle right here. So here's a covered strangle in Berkshire Hathaway. This is actually a full, a little bit different than what we just went through, but that thing's up 600 bucks, 85% in 21 days. Probably take it off here, and I might redo it. I did not look at Berkshire Hathaway per se. Um, all right, now I'm just catching up with here. Uh, we've got gold 112. That thing's fine. SOXL, we have this as a just a naked put. That thing's up 11%, 50 bucks, not a big deal. Trade, MicroStrategy, or we're in here. ES with just another naked put. This is one of those 120-day naked put trades. Oil, a 112. You can see Apple. This is a poor man's covered call. This is just a standard out of the money poor man covered call. Again, probably in the wrong account, but I'm just going to leave it alone for now. Uh, and then CBOE, we're in CBOE here with just a naked put. I'm bullish on CBOE. I'm bullish on anything that's the markets right now, and CBOE is being one of those. This is just a cash secured put in CBOE. That thing is up 52% in 7 days. Nice trade. UNH, again, spec trade. We're just pulling out whatever whatever spec trades seem to make sense based upon the different types of strategies that we have. So here's the put spread in UNH. This thing's up 43% in 6 days, up 436 bucks. I mean, I thought it was overdone. So we put that trade on. There's a really good trade. We're going to let this thing go for a while. And then here is the covered strangle part up at the top here. Here's the covered strangle. So you can see the spec trades. There's a lot of trades going on here as far as spec trades go. But here is that, not the 160-day naked put, by the way. I don't think I have covered strangle as a thing. So there's a covered strangle, the one we just put on, and we'll run this on ES because our account's big enough and we have plenty of buying power. In fact, buying power is sitting just over 50-some%. And I'm not really worried about the buying power on this right now. A lot of it is sitting in gold and oil as well. So anyway, I wanted to just give you a sense of, according to the trade plan, we're exactly where we want to be, but we have a lot of extra spec trades on because we have buying power available, even though we have our max strangles. Once we add more, maybe to the 112Cs, and once we get another trade on next week, then buying power will start to increase more. We'll probably have to scale back on some of these spec trades, but I was able to put more spec trades on, and I'm just trying to generate the short-term cash. Like most everything here, except for this Apple one, which again, I'm not happy that it's in here. It's the wrong account, but I'm going to leave it alone for now. But if I have to take it off, I will. Everything else is just short term, 28 days, 28 days, 31 days, 58 days on 112, 16 days there, 30 days there, and then again 112, and then 30 days, and another 112. So 112s are at 60. Everything else is like 30 days or less now, and that's when I put them on was at 30 days. So I expect to take those things off in a week or two and keep moving through it. All right, so hopefully that makes sense. Let's double check chat. SPY PMCC. With SPY starting strong on Monday, extrinsic value in short call pretty low. Well, let's take a look. All righty, let's get into SPY, and we also have one in QQQ. All right, so the SPY trade, we sold the 582. Obviously, that's in the money now. We're at 588, $6 in the money. The extrinsic is not that low, though. I put it on for an extrinsic of $1,876. Okay? And there's still $800 of extrinsic left in this trade, so I do not intend to do anything here. It can keep going up. SPY can keep losing. I can lose a bunch of money on this covered call. I'm fine. I just want my $2,000 or my $1,800 of extrinsic. I just want that cash. Okay. And then we should be seeing a nice move up on, the underlyings because those are cranking away. So you can see that we're up today over $1,400 despite having a covered call on. But that covered call's got too much extrinsic left. There's nothing for me to do. I really probably wouldn't roll it or do anything at this point in time, especially with the market up 100 points today. With turnaround Tuesday, tomorrow, we might give a little bit of that back. I just want my extrinsic out of it. So that's really what I care about. And when you look at uh, let's look at the income covered call. The current value right now is 62,583. So this trade, as of this exact second, is up almost 13,338. It's up 28% now in 109 days. So I'm loving this trade. Uh, if we make some more cash on this thing, I will add another SPY leap at some point, but these have plenty of time left. So nothing to do in the SPY leap. Hopefully that made sense for you. And then on the Qs here, we're at 514 on the covered call. Obviously, we're in the money by 5 points. Uh, the extrinsic on these is still sitting at 281 from 439, so we still have more than half the extrinsic. There's just nothing to do, in my opinion, here. The Qs here are 19,487. So 19,047. This thing's up 22% in 38 days. SPY, what was it? 62,565. Yeah. So we're up 22% in 38 days on this one. They're in great shape. There's nothing to do on either one of these right now. So we just sit and wait and soak in the cash. This Berkshire Hathaway covered Strangle, probably take this thing off. It's at almost 90% winner in 21 days. It's got 10 days to go. Yeah, we could make some more money, but I don't know if this thing's coming off in one trade. We could try it. We'll see. But if not, I'll probably have to break that into pieces. Take this Berkshire Hathaway trade off. CBOE being up 50% in 7 days, fine, but it's a small dollar amount, so I'm going to let it go. MicroStrategy, I think with the down move here, this sets up, I think, for another potential naked put, out of the money naked put on MicroStrategy. What did we do on the last one? Excuse me. Still struggling with my voice after weeks now. This was a 16-day trade, so we were keeping them very short, 16, 17 days. Doing something around 15, maybe the 320 or something here. Putting this trade on, again, it chews up some buying power, MicroStrategy does, but I mean, down at the 320. And I'm going to have to jump in a moment, but down at the 320 on MicroStrategy. Where are you? Where are you? 320 puts us right at the anchored VWAP and the bottom of the 3 ATR and a bit of a pivot level. So I like the 320 here, actually. We could go down and hit it, in which case, hey, if we got assigned on MicroStrategy here, it chew up $20,000 in buying power, but we would own this thing and then we could write calls against it. I'm very bullish on Bitcoin. So I like the 320. If we took in $610, using $14,739. This is 4% in 17 days. Can hardly go wrong with 4% in 17 days. So I do like that. And we'll drop another one of these in there. I don't know if we have to go that far out, but we'll leave that on. That'll be the only trade that we'll let cook. Everything else is fine. We're in good shape. All right, I'm going to wrap up. Let you guys go. Hopefully this was helpful. You get a lot of trade ideas. I mean, there's a boatload of ideas in here today. So hopefully you can make some hay with those. And we'll let you guys go. I will get this posted uh, as soon as possible there as well. So hang tight. All right. So we'll get this. Whoop, MicroStrategy got filled. So we'll post that trade. Lots of good stuff in here. Keep it going. Things are running well. We'll see you guys later. Bye bye.